Well, let's move on then, and let's move on to our next management on the show. That's Mahindra Holidays. Well, the numbers were a little bit disappointing actually in the past quarter, softish, but as we know, the industry itself has got a lot of tailwinds to go with it. So let's get a couple of details going with regard to the past quarter's numbers. We have with us Mr. Manoj Bhat, the MD and the CEO of the company. Hi, Manoj. Good morning. First of all, happy Dhanteras to you, your team, your entire family as well, and hoping for a cracker in the second half of the year. Well, let's get a couple of details going then. Could you tell us, what was the occupancy in the past quarter? If you could help us out with that in the first half of the year, and what's the target for the year, and also what was the quarterly membership addition run rate in the past quarter?
First of all, good morning, Nigel, and happy Dhanteras to you too. So thank you for having me on the show. So quickly, I think I'll just give a quick update on the past quarter. You asked about occupancy.
I think we lost the line there with Mr. Bhat. We should just be able to have him back with us. So yeah, I mean, those are.
He's back.
I think Mr. Bhat is back with us. Mr. Bhat, go on.
Can you hear me?
Yes, we can. Please.
All right. So I was saying that occupancy is 77.5%, which is roughly in line with where it was last year, same quarter. And overall, I think room addition has happened. So overall, room nights have gone up. The other thing is in terms of member additions, I think member additions were about 3,500, 3,583 to be precise this quarter. And overall is 3.02 lakh members this at the end of September. So we're doing pretty well in terms of our own plans. The highlights really for me are, inventory addition. We added about 219 keys this quarter. We added about 3 new resorts, destinations. Also, from my perspective, if you look at the average sales value, what we call as AUR, that's at 5.05 lakhs, which is about 28% up compared to the same quarter last year. So a lot of positives, I think, focus on premiumization, making sure that our members are finding holidays. And I think overall, it seems like we are on track for a good second half also.
Mr. Bhat, is there at the margin, good morning, Prashant here, the dominant sort of narrative or the talk has been maybe a cyclical soft patch. Are you seeing any of that? I mean, if you ask over the last couple of years, where did all the wealth generation which has happened gone? It's gone into real estate, it's gone into a couple of other sectors, and it's gone to a lot of holidays. Are you seeing any of it, any indication in terms of bookings or new member additions that tells you that maybe we are entering a bit of a softish patch?
So I think, first of all, I think our model is a bit different. So we are a member-based model. So clearly our occupancies, even in, as I see October and looking into this quarter, I don't see any impact in terms of number of people holidaying. Secondly, from an industry perspective, if you look at the numbers, I think occupancy is still up compared to last year. And the ADRs are still up compared to last year. So from that perspective, we are not seeing any signs of a slowdown in terms of people spending on holidays, people traveling. And that's something which, in fact, we were doing a consumer survey. And what came out clearly is that combining weekends, combining short holidays and long holidays, I think there's a lot of people holidaying 20 to 30 days a year, which is very, very positive overall for the industry.
It's not showing up in new member additions as well, Mr. Bhat?
So new member additions, can you hear me?
Yeah, please.
Yeah, so new member additions, as I had mentioned last quarter also, I think we are looking at the right product market kind of mix for our products.
So you don't see any slowdown in the rate of addition, basically.
Yeah, so I think it is slower than last year, but that's more because of our internal choices we are making in terms of channels, but not really from a demand perspective.
Okay. Can you, Mr. Bhat, hi morning, can you elaborate on that? Because, I mean, when we see the number optically, new members have fallen. I mean, the fall is 27% year on year. So one would quickly jump to assume that this is because there's lesser demand, but you're saying it's not that. So what is the issue?
So as I mentioned last quarter also, we embarked on a journey of looking at what channels to use from a overall product perspective. So, for example, we have actually stopped going to some tier 3, tier 4 cities. We have eliminated certain channels in terms of looking at what is the optimum kind of profitability mix which we would need. So that those are some of the changes which are impacting. We have actually taken out the 3 and 4 year product. We have replaced it with a 5-year product. So all of those combination of those things is causing the overall member additions to be lower. And that's directionally what we have said, that this year we are going to focus on premiumization, and that's where you see it coming up in AUR, which is up 28% year on year. So if you look at the total value, it's down about 6%. If you look at volume, it's down 27%. And if you look at value per sale, it is up 28%.
So, but by when do you get to the run rate that you've sort of laid out in the past, which is 5,000 members getting added on a quarterly basis? Given the strategic shift that you just described, are you still in tune with that target?
So I think that's something we are evaluating. I think we are coming up with a new strategy in terms of what is the right optimum number of members. I think for this year, I think we have, as I said, focusing more on value and not really on volume. I think as we go down the next quarter or two, I think we'll come back with what is the plans for the way forward in terms of member additions.
Can you quantify this premiumization that you're talking about? Currently, as a percentage of your mix, what is it? As you're saying, it's increasing. So in value terms, you do better and it'll offset some part of this lower addition that we're seeing. So what is it? I mean, what was it? What is it? Where is it headed?
So currently our average unit realization, or AUR as we call it, is 5.04 lakhs, which is up 28% compared to last year same quarter. So that's the end result of all the activities we have done in terms of eliminating, changing the mix towards longer tenure products, looking at more premium products to be sold into the same markets.
Manoj, as a percentage of the total mix, what is it? I mean, premium customers as a percentage, which is helping you reach this 5.04. So is it 50%, 60%, 70%? What is it?
So we measure it by tenure. Longer tenure products are 63% today.
63%.
Yeah.
And it was earlier, how much was it? And where is it headed?
I think it is. It was up about 2%. So compared to the same quarter last year. So the increase is not so much material, but I think what we have done in terms of looking at markets, looking at giving consumer offers, all of that mix of activities we have changed. That's what's causing the premiumization.
Okay, all right. Thanks a lot, Manoj, for joining in. You're sounding quite optimistic about business. I'll tell you what, I have a family of 4 and we're always looking for holidays. And, so that's any long weekend, we try to rush out there. So I guess that's a change that we've seen in the last couple of years. Wishing you a good day ahead.